The suppression of gold and silver, I think, has been exposed, and the countries around the world are using it against us. And maybe this is the understanding and the realization that this administration has come to. You're seeing the price slowly move up, not too fast, not too slow, but it's outperforming everyone's expectations all of a sudden after underperforming and underwhelming for a very long time. You got silver at a 14-year high. You got China flying around the world as the second largest producer of it in the world, buying up all the doré and concentrate from Latin America, in particular Peru and Mexico. You have Russia, who has openly made it a part of their strategic stockpile, the first government to openly do that. You have India, who's bought over 800 million ounces in the last 6 years. And now you have Saudi Arabia taking a massive position in SLV.
The
Now,
relative strength index for gold is above 68, and for silver, it's also high, but both are still below the 83 and 88 thresholds hit during past bull runs. For silver, clearing the $50 line could bring in tons of retail buyers and short-term traders, since that level has acted like a ceiling for literally over a decade. Breaching it will likely trigger a new phase of speculative interest. Looking at the current fundamentals, a strategic shift is on the way. Gold is quietly replacing US Treasuries because gold has consistently outperformed bonds for decades. According to macro expert Andy Schectman, as countries lose trust in US debt due to America's insolvency, this shift marks the beginning of the end for the dollar's role as the singular world reserve currency. Meanwhile, Andy warns against being fooled by the price. The quiet rise of silver isn't just a technical move, it's a strategic accumulation by global powers. While the public barely notices, nations like China, Russia, India, and even Saudi Arabia are turning the tables on Western manipulation. Russia's integration of silver into its strategic reserves and its pivot to China as a primary trading partner have created a parallel market outside Western-dominated pricing mechanisms. By 2025, Russian silver exports to China surged 80% year-over-year, facilitated by yuan-ruble settlements and bypassing dollar-based systems. Forget about trade wars. The recent US tariffs are less about economics and more about a desperate race to reshore critical resources. Andy Schectman points out that while America was distracted, BRICS nations were stockpiling metals, buying exchanges, and securing resource-rich regions. BRICS central banks have spearheaded gold acquisition directly from domestic miners, and this approach revolutionizes traditional Western channels across various major commodity exchanges. World Gold Council data shows 19 out of 36 central banks optimized gold purchases directly from domestic sources through numerous significant strategic partnerships. Before we dive into Andy Schectman's sharp insights from his latest interview with Mario Ineco, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
gold will not replace the dollar. Gold will replace what stands behind the dollar, the treasury. And I think when you look at the price of gold, which has doubled the performance of the 10-year treasury over the past 25 years, with no counterparty risk, think of sanctioning against the Russian $5 billion in Forex reserves, or in US treasuries, rather. It's a big deal. It's a very big deal. And, you know, the gold is an asset that is not simultaneously someone else's liability, and it's outperforming the heck out of the bond market. Look at, like, for example, last year, gold was up 40%. The US treasury was up 4.5%. 10-year. Look at this year. Halfway through the year, that treasury's up 2.5%, call it. And it's not even quite that much, but let's call it that. The dollar's down 11, so you're negative 8.5%. Gold's up 40% again. So it's a situation where not only is it outperforming, it has no counterparty risk, which is the big deal. And it is acting, I believe, it is acting as the cornerstone to a new system. And you're seeing all of these countries embrace it in lieu of treasuries. I think it's a very big deal. I think it's a big deal for the treasury market, for the dollar, for this new system. And it's one that inspires confidence and trust rather than trusting a insolvent, broke country that is going around throwing sanctions and tariffs upon people or countries. I think much of the world has had it. It's one thing to do that and have your house in order. We are broken. We are insolvent. And after what we've gone through the last 4 years previous to this administration, with lawlessness and open borders and judicial system questioning if it's two-tiered or not, election interference or not, immigration, all of the things that we've seen that I don't need to rehash. The world is tired of it. And instead of extending the olive branch, it's the stick. And when you talk about, should we be doing this with tariffs? Look, being the world reserve currency, Mario, has given us an exorbitant privilege by having the world take our or sell us their products for our dollars and expecting them to put the reserves in treasuries has kept asset prices in this country high. It has kept goods that we purchase at Walmart low. And this is our standard of living has been really fostered by the good graces of our foreign creditors. And things are changing now. So you got to wonder, this is Triffin's dilemma. If the world takes our dollars that we print out of thin air for the goods that they create with effort and sweat, and then as a result, putting excess reserves in treasuries keeps our standard of living high, our asset prices high, our interest rates low, our goods cheap, isn't that really the trade-off? And we say it's not fair, but is it really not fair? I think we should be careful what we wish for. And if I had to guess, the days of the dollar being the singular world reserve currency are coming to an end very quickly. I think someone got in Trump's ear because we become net importers since November, since the election, not since the inauguration, but the election. Someone got in his ear and said, look, the BRICS countries, well, they are massively accumulating precious metals and not just precious metals. The Chinese bought the London Metals Exchange, which are the base metals. The Belt Road is all about aligning with countries that are very resource rich and underdeveloped. It's all about resources. And so I think someone got in his ear and said, if we don't do this, this country's dead in the water. And I think that it's not just about gold. They just reclassified silver as a critical mineral and platinum as a critical mineral. So they understand that gold and silver and platinum are probably, and all of these assets are probably worth a whole hell of a lot more than the currency that is being used to purchase them. And I think that's what they are doing. But they lied about the intent. Everyone said, oh, it's tariffs, it's arbitrage. Bullshit, it's tariffs and arbitrage. That's not what it is. That's the ruse to get it back without everyone saying, you're reshoring, you're not going to give it back up. This is strategic. And I think that's what it ultimately comes down to at some point, Mario, is that all of the UK is in the same pickle that we are. I saw a report that the UK someone in the UK wrote a year or two ago, said we are screwed because we've given up so much, all of our natural resources that we need. We're reliant upon other countries like China. And that's kind of what the realization is that I think the U.S. understands. And all of this under the guise of Trump tariffs, I think is much deeper than that. And but that was the cover so that they could bring back as much as they could without the world catching on and maybe crowding them out of their own aspirations. We've seen just in the month of September, 42 million ounces delivered into COMEX. 42 million ounces, 1,308 tons delivered into COMEX. That's massive amount in a non-delivery month. You got silver at a 14-year high. You got China flying around the world as the second largest producer of it in the world, buying up all the doré and concentrate from Latin America, in particular Peru and Mexico. You have Russia, who has openly made it a part of their strategic stockpile, the first government to openly do that. You have India, who's bought over 800 million ounces in the last 6 years. And now you have Saudi Arabia taking a massive position in SLV. Now, I hate SLV, but if you look at it closely, they bought enough to where they could demand delivery, which they probably will. I look at silver again as being the word, when I think of silver, I think of the word asymmetrical, lowest downside, highest upside. And it's been suppressed for a very long time. Suppression or manipulation only works by pushing it in the direction that it is going over time. And the U.S. used to be able to do this. The West used to be able to do this. The U.K., the LBMA, COMEX in the United States, all the Western countries were able to do it for whatever reason, whether it be the military-industrial complex, as I argue for silver, or Gibson's paradox with gold, the inverse relationship between real interest rates and gold. Those things work when you're not challenged. But the countries in the global south are now wealthy, coordinated, motivated, and sophisticated. And they're using it against us. And I always point to what the administrator of the BRICS grain exchange said a year ago when it's being developed right now. And he said, look, we produce and consume more grain than they do in the West, but that will change Oh, she said, but we can't control the price. It's controlled on COMEX. But that will change with the development of this new grain exchange, whereby the demand that comes out of BRICS, that's going to change things. Knock that off. So I would simply say to you that this is something that I think has been exposed. The suppression of gold and silver, I think, has been exposed, and the countries around the world are using it against us. And maybe this is the understanding and the realization that this administration has come to. You're seeing the price slowly move up, not too fast, not too slow, but it's outperforming everyone's expectations all of a sudden after underperforming and underwhelming for a very long time, so much so that most of the public won't even notice it. And that's the crazy thing. They aren't noticing it, but someone is. Who has the ability to bring into the COMEX 42 million ounces in the month of September, the delivery contracts in just the first few days? So this needs to be thought about. These people that are doing this, whoever they are, the level of sophistication and wealth is off the charts to be able to do that.
We're witnessing the quiet beginning of a new world. The Shanghai Cooperation Organization is aligning behind a new economic model. The real game changer is mBridge, a cross-border settlement system that bypasses the dollar and is already faster and cheaper than SWIFT. The West's financial supremacy is being challenged. In the ever-evolving landscape of global finance, whispers from Beijing suggest that China may be on the cusp of a groundbreaking move, unveiling a new initiative that could position the yuan as a formidable contender in the international currency arena. China is internationalizing the yuan by making it directly convertible into gold. This isn't just about trade, it's about building a new financial system with a physical backbone, and it's happening right now. China's strategic accumulation of gold is no coincidence. It's a calculated hedge against dollar dependency and a potential foundation for yuan credibility. As of the second quarter of 2025, China's official gold reserves stand at 2,298.53 tons, valued at over $208 billion, with purchases continuing for the ninth straight month through July. Let's get back to the interview.
The Shanghai Cooperation Organization is something I've talked a lot about as well. They're the largest regional military and financial organization on the planet. The way that they are presenting this, at least Xi, Modi, and Putin are presenting it, is that they're all partners, not rivals. But the Shanghai Cooperation Organization in and of itself is 41% of global population and 34% of GDP, 24% of the world's land mass. It's a big deal. And I think that you're looking at, Trump, I think, overplaying his hand with India, pushing them right into this group by imposing 50% tariffs. And, India hosts it next year, the BRICS meeting. I think that they are reaffirming peace on their borders. You saw meetings between Xi and Modi and mutual cooperation. And I think it's a misstep under Trump. There are a lot of things happening right now, but one of the things that I think when we talk about the BRICS that is most, how do I say this? I think most significant is the further development of their bridge technology. Now, it's been known by most as mBridge, right? The BIS, the reason we haven't heard much of anything, Mario, I believe, is that the BIS pulled what amounted to espionage at the 12th hour to the BRICS nations when they, for the previous 4 years, through their BRICS Innovation Hub, the BIS Innovation Hub, Bank of International Settlements Innovation Hub, they came out at the 12th hour after for 4 years developing the technology with China, which is largely Chinese technology, China, Hong Kong, Thailand, UAE, and then Saudi Arabia becomes the fifth full member of mBridge. And literally at the last minute before the meeting in Kazan, you get the BIS Augustus Carstens, who has since, I think, been replaced by someone else as his tenure ended, but he was the acting, the general manager, the head of the BIS. He said, we can't be involved, the BIS can't, with technology that would allow any country to sidestep Western sanctions, as if he was just realizing for the very first time that Russia was the R of BRICS. So everything went very quiet for a while. We fast forward to an announcement that we saw about 6 weeks ago, and I don't think you and I have talked about this, whereby you had China come out and say, we've rebranded this technology called the renminbi cross-border payment system, or the bridge. And for our first connection with this technology, we've connected 11 Asian countries and 5 Middle Eastern countries. The 11 Asian countries, ASEAN, are all the countries in Southeast Asia, and they amount to 35% of global GDP. And two things subsequently have happened. Now, forget about the 5 Middle Eastern countries that are adding on to it. You're talking over 45% of global GDP just in those countries. This technology is not compatible with the dollar, the euro, or the pound, i.e. the SWIFT system. It settles in 7 seconds instead of the 3 to 5 days that SWIFT takes at a 98% reduction in fees. But it's free from SWIFT interference. Two things have happened subsequently. One, Sergei Lavrov, the Russian foreign minister, came out and said, we're going to offer this technology not just to the BRICS countries, but we're opening it up to the world, except it is not going to be opened up or compatible with the dollar, the pound, or the euro. So in other words, they're opening it up to everyone else but us in the West. And they're starting with the Belt Road Initiative, which is 75% of human population right now as it is, 50% of global GDP. So you add in this technology to the BRICS, the Belt Road, the Shanghai Cooperation Organization, and the Eurasian Economic Union, you're talking 90% of human population who will have the ability to transact outside of SWIFT, settle in 7 seconds, and at a 98% reduction in fees. The second thing that came up was a statement or an admission, it was in Reuters, and they said the Asian countries now represent China's largest trading partner by far. And they are double the size, about 800 million people, of the United States. And they are now China's largest trading partner by far. And the United States has dropped to number 3. So you put it all together, you have a system that is growing, that is expanding, that is cooperative, and that is keeping the West out. And the West keeps overplaying their hands, we do, by doing things like imposing 50% tariffs on our allies like India. And that, I think, is going to have negative effects and ramifications that I don't think people quite understand yet. This is the acceleration, this growing bridge. And the last piece I would add to that is that now you have China coming out and saying, and here's another piece, we are going to internationalize our yuan. And by doing so, yuan is now immediately convertible into gold. Right now, without having to switch into dollars, they just made this announcement a few months ago in the Shanghai Metals Exchange. And you can take delivery in the new facility that just was completed in Hong Kong. So if you are Saudi Arabia, you sell your oil to China for the yuan, you can immediately convert it into gold on the Shanghai Metals Exchange and their new facility in Hong Kong. But gets better than that. The next facility that they are building to expand the infrastructure for settlement is, you guessed it, in Saudi Arabia. It's under construction now. And their intent is to build this multi-jurisdictional system of vaulting throughout the Belt Road, throughout Asia, Africa, and a little bit in Europe to facilitate settlement. So all of these countries that will trade local currencies back and forth, you keep hearing local currencies. They'll trade their local currencies back and forth over the mBridge network, settle imbalances in gold, and take delivery through multi-jurisdictional vaults. Perhaps they sprinkle gold, each country, in all of the vaults around the system, and you see vaults springing up in Singapore, in Moscow, in St. Petersburg, in Dubai, the new BRICS facilities that will be built. All of this will be the skeletal system of this new settlement system that they are proposing. Now, we once talked about it as the unit. The unit is what Dilma Rousseff, the former president of Brazil and the head of the BRICS New Development Bank, said they had agreed upon in principle. I believe they have kind of shelved that until Trump is gone. And instead, China's taking the lead and saying it's the process of internationalizing the yuan. Instead of throwing the BRICS common settlement currency in their face, which they've agreed upon in principle, in Trump's face, China's just calling it internationalizing the yuan, but it's the exact same thing. Trade in local currencies, not compatible with SWIFT, settle imbalances in gold. It's virtually the same system that they have in place. The unit was 60% BRICS plus currencies, 40% gold deliverable upon request through a series of vaults. I would argue that this is exactly what they are doing, setting the stage for them to just shuffle slide the unit right in when the time is right. But yes, the BRICS are growing, and to underestimate it is a critical mistake at this juncture, I think.
In recent months, investors have favored bullion over other asset classes as rising geopolitical tensions have boosted its appeal as a safe haven. The increasing supply of silver, combined with its declining value relative to gold and copper, ensured its widespread and central use in everyday trade and currency systems. What once seemed like small shifts in trade and resource policy now point toward a structural transformation of the global monetary order. If gold, silver, and new settlement systems are already reshaping the balance of power, how long before the world openly acknowledges that the dollar's reserve currency era is over? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.